The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're looking right here, just checking out the markets and what's going on. We come here to talk about maximizing leverage, minimizing risk, and being one step ahead of the markets. Well, this morning, what do we got going on? We got the S&P right now is down 2 points. We got the NASDAQ up 2 points. We got the Dow down 27 and the Russell down a mere 1.5. Gold is up 5.6. Copper is basically flat on the day. Silver moving strong, being the big leader of the day, up 1.5%. We got corn down 2 points. We got soybeans up 7. And we got oil pretty flat, up 21 cents on the day right now from yesterday's settlement price, or Friday, I guess. And then looking over at natural gas, it is up 1% on the day. Consistently a big mover lately, between 1 and 4%. We're seeing over and over again. And definitely a market to be looking at if you're looking for some volatility. Look no further than natural gas. On a euro dollar, it is up 69 pips. Pound dollar is up 89. Aussie dollar down 3. US yen down 26. And US franc down 18. With the US Canadian up 2. Pretty much across the board, besides US Canadian, which is basically flat. Dollar showing some strength with the market's weakness based on the disappointing data that came out this morning. That gives us a quick summary right there on the markets. Let's go ahead and talk about our fundamentals and what's been going on since we last spoke last Friday. Well, on Friday, we know that there wasn't a whole lot. We did have the China manufacturing PMI number come out. That actually came in worse than expected. And you can always get the PMI numbers from various websites. But if you want the Chinese website to get it from, then the PMI monthly report right here, you can do fung, I guess. Funggroup.com. It's like fun with the extra G in there. So funggroup.com. And you can go to their research center and you can actually pull up the details on the PMI report that just came out. Also, another great website to always keep in your arsenal there is Market Economics, M-A-R-K-I-T, economics.com. And they release PMI data across the board, and you can go in and they cover every country. So it's a very easy place to get all the PMI data in one spot. Now, that was pretty much all the stuff we had come out over the weekend. That was any, I guess you could say major consequence. And let's see here as far as that. The one thing we did have, I guess, was the Aussie dollar report come out. So if you were an Aussie dollar trader, let's go ahead and pull that one on up. And looking on down here, we got the Aussie dollar, AUD/USD. Aussie dollar was trading at 1.0423. Let's go ahead and check out what happened this morning or actually, I guess it would be last night when that report came out. So I'm going to back up a little bit here and give me some 10-minute bars, and we'll zoom on in and look at yesterday evening. So right here, so 7:30 would have been 6:30 Central, which would be about right here. You can see that number came out. Retail sales lower than expected. They thought they were going to come in at 0.4. They came in at 0, and basically meaning no change over the previous month. And things not picking up. That, of course, hurt the Aussie and gave strength to the dollar. And it moved down quite a bit, but it was able to gain most of that ground back before moving on back up and moving on over. Now, if I go in, I can also check out a couple other things like the deviation levels. We talk about those on a pretty consistent basis here. And let me pull those up, and I'll talk about them right now. All right, so on the deviation levels that we got over here is, I got to log in so I can get access to them. But we're going to look at the Aussie dollar and how far it moved across the board. So let's check out the diagnostic deviations. Pull it up, and there I go. All right, Aussie dollar. Aussie dollar, we had expected a move down to 1.0398, and then 1.0387, then down to 1.0370. We didn't get the other two. We got that first level, so it definitely would have been your take profit zone. And we saw the market pull down to a low of 1.0396, just 2 ticks below the first deviation level. And what do you use on those deviation levels? Well, what we do is we post them up every day. And so this is actually where you would have tightened your stop as soon as it hit that level. So you tightened here, you'd be glad you did because it gave it all back and moved on back up. So that was our big Aussie dollar news trade that we had. And we can go on and look at, that's basically the main report we had on Sunday. Now, what about today? And I'm always looking for those Aussie dollar trades. They can make some pretty good trades. You can straddle them and do a lot of different things with them, especially when you're trading over on Nadex. So looking at yesterday, we didn't really have much else come out. Of course, the one thing we did have come out is the ongoing stalemate happening in Congress. And we'll see where that goes. But they literally are starting to call it just a stalemate, flat out. And, Obama doesn't want to lower taxes on the rich, which, if it was about revenue, the Republicans have put forth proposals to actually increase revenue through closing loopholes. So at the end of the day, they could get, basically the same dollar for dollar that they're looking for. But he's rejecting that. Instead, what he's saying is, hey, I'll cut about $600 billion, but I want $1.6 trillion in new stimulus power. And he added in his latest proposal that he wanted the ability to raise the debt ceiling whenever he wanted, for whatever amount he wanted, without having to get congressional approval. Like, really? Really? And that's the comments that came out of their mouths. Boehner's like, are you serious? He's looking at this thing that Geithner puts in front of him. And Obama has designated Geithner to be the spokesman. And Boehner, I have a little nickname for him, but Boehner literally came in and was like, are you kidding me? And then you go in and look at, what do the other guys say? Like, Ron Paul starts laughing. He's like, you can't be serious. Paul Ryan starts laughing. And he's like, there's no way. And so obviously they're saying they're not serious about coming up with a resolution because they know we're not going to agree to this. And yeah, the Republicans are going to get blamed, even though the funny thing is they are willing to vote for it right now. There's only one group that's willing to not vote for a particular group. They're willing to vote for everybody to get it. But, Obama's like, hey, I don't care if everybody gets it. I only want this group to get it. I don't want those people to get it. And it's just personal. It's vendetta type thing. But so that's on the table. And, but do they really think that he's going to give them unlimited spending power and they're going to increase taxes? I mean, there's no way in the world that's going to happen. So unless one side or the other just decides to go against the reason they were elected, which I don't see that happening, here comes the fiscal cliff. Obama will, of course, take on some blame when that does happen. But they're basically trying to put the Republicans in turmoil and probably with the goal of trying to gain control of the House in the next midterm election. So that would be, I think, the political gamble they're taking by trying to do this. And I don't know. I mean, part of me last week was like, I think they might be able to pull off something. But after seeing that last proposal, I'm just like, wow, there obviously is zero progress. They may as well not been talking for the last 6 months. So, anyways, continue to see the expected volatility. I'm sure we're going to see news reports on how great progress is made and how no progress is made and how talks are deteriorating back and forth. But we should keep looking for those, triple-digit swings in the Dow as news keeps coming out on each one of these reports. Now, what else we got going on? Well, we had the manufacturing PMI over in Britain. That number came on out at 430, so we'll go ahead and check that out. And again, manufacturing PMI, that's basically, it's a big leading indicator in the market. And they survey, like in the Britain one, they survey 600 purchasing managers and ask them basically what they think, what they're doing about employment, production, orders, deliveries, inventories, on down the list. Well, anyways, that number came in stronger for Britain, and it came out at 4:30 a.m., so we got 3:30 Central Time over here. There we go. And we didn't see a whole, massive move on it, but after that, it just kept, rising. Pound dollar has been getting stronger ever since. And sort of an interesting thing, this is just a side note here, the Euro Franc, trying to push on back down to that magical 1.2 level, back on up to a daily chart, and you'll see what I'm talking about, where they pegged, and they said, hey, we are not letting the franc get stronger against the euro below this level. And saw a news report come out where the Swiss bank or whatever is actually going to start charging banks negative interest for holding francs. So they're really trying to make sure people are selling francs. And it's just, talk about confusing times. Like, they're penalizing them for holding their accounts for trading firms, holding the cash in francs. They're like, hey, nope, sell them, get rid of them, because we don't want it getting any stronger. And we're going to make you pay if you do. So, crazy times. Looking on over and checking out what else we got. Now, obviously it looked better over in Britain. Looked bad in China. Well, it's also looking bad right here in the United States. And as I'm sure you are aware, if you've been watching the markets at all this morning, you saw the markets come in here and they opened up and they filled in the gap. We had a great gap fill trade happen this morning. And basically all the major indices filled. And then Nasdaq, I think, came close to it. If it may have actually filled by now. And I already closed out of my trade. I hadn't quite filled yet, so it's very, very close. But anyway, so let's see here. It may have just filled. But anyways, we'll go ahead and look at this right here and see the S&P 500. It was already trending down towards that gap fill. That PMI number came on out, and then bam, fell on down, got a little bit stronger, and then just, negative all the way. So that's a very, very bearish thing for that number to come out negative. It's actually been ticking upwards and beating expectations the last couple months. And people thought that'd be, a very positive thing. We had a little earlier number come out. The final manufacturing PMI actually came out at like an hour earlier, and it looked really good. But then when the ISM, the important one, came out, it just bombed on down. And you can get the details on that report over at ism.ws and the Institute of Supply Management, and read the details on it. But they survey 400 purchasing managers over inventories, new orders, hiring, employment, everything, just like the other PMI numbers. And but it was just very negative. But you can see right there, and I'll post that on in the Tigers Den for you. But you can see that report and read through it. And the markets obviously just were not very pleased at all with that number when it came out. We also had construction spending came out a little better than expected. No big surprise with the last-minute stimulus still out there. And then the ISM manufacturing prices did not help anything at all. They came in. Now, they were, that's not near as big of a number. But, you put the ISM manufacturing prices with the ISM manufacturing PMI. And, just all in all, just bad numbers all the way around. Total vehicle sales are coming in on the U.S. today, but they'll be leaking in throughout the day. And not really a big important number to be watching. And then we look over at building approvals. That's going to come out on Aussie tonight. Definitely one to watch for you Aussie dollar traders, coming out at 7:30 Eastern. Expectation is negative 1.8%. And so if that number comes in worse, that'll just be further weight on the Aussie dollar. And you can get access to that on the Aussie's website over at abs.gov.au. So if you're an Aussie trader, definitely keep your eye out for that one this evening. And then Australia's also going to be announcing their cash rate. So this is their Fed funds rate coming out tonight, okay? And that's going to come out at 10:30. And so obviously that's the big trade right there. And you want to trade it obviously with limited defined risk. On Nadex, we'll talk about some ways to do that here in a second. And but you can hop on over to rba.gov.au, rba.gov.au, and you can go in and click on statistics right here, and then you'll be able to click on cash rate. And you'll be able to get all the information you want to find on there. But it's a cash rate for the Aussie dollar, so basically the Fed funds rate, and that obviously is a massive impact trade. That one is going to, again, just a quick summary for you, is happening again tonight at 10:30. And of course they will release their rate statement at the exact same time, 10:30 Eastern time. All right, stay on there, folks, and we'll come right back right after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right. Welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and we're checking out a few different things. One of the things I want to talk to you about was to make sure you hop on over to TFNN.com right now. And if you're not in front of a computer, you can definitely do it at the time. But if you're listening, you're in front of your computer or you're on your mobile phone. And you know what? You can do this on your mobile phone too. And because you're listening to us at TFNN.mobi. And take advantage of the Tiger Dollar Holiday Special. That's a 25% bonus match. So how many Tiger Dollars you get a 25% match towards that. And also, TFNN will donate 10% of your purchase to the Salvation Army, and they'll do it in your name. So you actually get the tax benefit on that. We're going to need all the tax benefits we can get the way things are going. So hop on in there and check out that Tiger Dollar Holiday Special. That's the best offer I've actually seen on it. So I would definitely suggest that you do take advantage of it, just fill it in and get that going. And if you haven't already, hop on, check out the Diagnostic Box Spread Analyzer right here. And you can go in and you can subscribe. You get a 2-week free trial, risk nothing. Check it out, get access to my deviation levels, my tutorials on Nadex, and see how everything works. One thing you want to do as well, so we got Tiger Dollar Special, get that so you can get the discount. Hop on over, grab the Diagnostic Box Spread Analyzer 2-week free trial, and then hop on over to Nadex. Click on Nadex, and you can open a live or demo account. So you can go to Our Products, you can click on Demo Account, and you can fill in the information right there. In 15 seconds, you can have a demo account. They'll send you a password in your email. You'll be ready to go. Or get a live account, and you can hop on there with a live account, click on Start. You can go from start to funded in as little as 5 minutes. And Nadex just keeps making things better, but definitely check that out right away. Get going on that. You need a way to trade and to trade with defined risk, especially during the holiday season and during the current market, just the way things are going. So let's go ahead and check out some of the things that you could be doing. And I'll bring up a couple things on here. Is one of the things they're adding in that Nadex just released is they're actually adding in more strikes now. So you can go in here and you won't see all these yet. I think they'll show up on the demo account here in the next day or two. But on the live account, you'll actually be able to see they've actually added in more strikes. And so they're going to be putting in more strikes on multiple indices here. I'll pull them up and find those for you. Let's see, here we go. Forex. I think they're on the Forex right now. There we go. And there you are. So they, instead of having 3, they actually have made it 9 strikes wide. So there's even more binary opportunities for you to trade on. And you know what? They do have them. Let's see. Let's just go on down to binaries. And right there we go. 9 strikes wide. And you can see them right there. And so just a very, very cool thing that you can take advantage of. Why would you be interested in this? Well, you can go in and you can trade news events with completely defined risk and you can't get stopped out. One of the hard things about trading news, even if you're right, they can oscillate so much they can, stop you out. And if you're wrong, like your stop's going to get blown out if you're trading futures or forex, right? So it's even hard to control risk when trading around news. And with this, or gap fill trades, like I traded all the major U.S. indices gap this morning. Well, the danger on gap fill trades is it could just keep going. And but with this, you have the advantage of, hey, it could go against you some. You're not worried about it. You're expecting the gap to fill. You have time to be right. You can't get stopped out. And so you can go in here and you can trade the Aussie dollar. You can hop on that and trade that tonight. You can do it on the binaries or the bull spreads. And when you go in there, you could literally buy a binary above and sell a binary below. Or you could straddle and buy a basically, you actually could do a strangle. You could actually buy and sell a spread. So there's a couple of different ways to do it. But you can make money if the market goes up. You can make money if the market goes down. There's ways to make money if the market's flat. There's ways to make money not being directional, just expecting it to move a lot. And so, of course, the directional, expecting it to move a lot, not being directional, but expecting it to move a lot one way or the other, is the way you trade news. And so that'd be a great way for you to hop on, sign up for a demo account, check it out, and just see exactly how that works. And then, of course, you tie that in with the deviation levels, see actually how far do you expect the market to move. Like we saw at our half deviation level, Aussie dollar, last night went right to it, stopped, turn around. So that lets you figure out what strike to buy or sell. And anyway, so there's some very, very cool ways to play it. And I highly suggest you hop over there and check that out. And this is the perfect time of year to do it. Just with the fact that, it is the holiday season. Volume can lighten up. And with the fiscal cliff, news coming out every 15 minutes and not knowing what's going to happen next, you definitely want to have something that's defining your risk and limiting your risk. So you don't basically just don't have a bad day. Doesn't mean you don't have, doesn't mean all your trades are winning days, but at least, you don't have a bad day. You can recover from your days. And just think about the breath of fresh air of stopping your losses without stopping your trade. Meaning it can go down, it can hit your max loss level, it could keep going, but you don't have to make the decision to get back in. You don't have to put more money at risk. And if you're right and it comes back before expiration, you can actually make money on the trade. So anyways, just check that out. You'll be glad you did, I think. And, let me know any questions you have, dmartin@tfnn.com, and I'll be happy to answer them. We'll be right back after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And checking out what else is coming on up. We talked about the building approvals, the cash rates. What do we got going on tomorrow? Tomorrow is Tuesday. And tomorrow we have, tomorrow early AM, we got the Spanish unemployment change number. And as we know, it's been bad in Spain, 25% or greater unemployment over there. So that is definitely going to be a weighing factor on the euro. And then we also going to have construction PMI coming out of Britain. So you want to be checking that out. Remember, we had the manufacturing PMI come out today from Britain, but tomorrow we're going to have the construction PMI. And again, 3 a.m., Spanish unemployment change number comes out. 4:30 a.m. Eastern time, we are going to have the construction PMI number coming out of Britain. So you can be trading the euro dollar around 3 o'clock and trading the pound around 4:30. And then, let's see, it looks like Canada is actually going to have their Fed funds rate tomorrow as well at 9 a.m. They'll be stating their rate, and they'll be have a big rate statement. Now, there surely shouldn't be a surprise out of that one. The Aussie dollar one tonight, they've been moving that number around. And so I could actually see a lot more potential movement, especially if they change it. I mean, they had it at 3.5. They made it, 3.25, 3.25. They're expecting them to lower it on the Aussie. So if they don't lower it, then that'll definitely impact it. If they raise it, of course, if they leave it there, that gives strength to the Aussie. If they lower it, that'll lower the value of the Aussie because it lowers the reason to hold it. Looks like the NASDAQ just filled its gap, by the way. And looking on over, checking out. Let's see. So should expect a bigger move on the Aussie, but if you're tomorrow morning 9 a.m. Eastern time, Canadian dollar will have its rate statement. That will be a bit of a market mover, and shouldn't be huge. Like I said, shouldn't be a massive expectation. But if they changed it for some reason, if they lowered it further, or if they raised it up, that would be a definite surprise. Then that would have dramatic impact on the U.S. Canadian. And then Australia, man, if you want to trade nighttime, I mean, come on, Aussie, if you're starting to get the trend here, is the one to trade. So if you're a part-time trader, one to focus on. Aussie dollar GDP quarter over quarter coming out. The expectation is 0.6. It was 0.6 last time. They expected 0.8. So, and they pretty much not hit expectations, except for, I'm just looking here. I mean, rarely do they ever actually get it right on their expectations. There's only a few times I can actually see, twice in the past couple years. And I'm looking back even further just to see, okay, so since 2007, they've only actually been right 3 times. So on actually picking the accurate GDP on the Aussie dollar. What does that tell you? Well, it means they're wrong a lot. What does that tell you? That means the market likes to react when there's a unexpected number that comes out. So we should expect that there will be an unexpected number come out. It probably will not come in at 0.6, and because it's only happened 3 times since 2007, so in 5 years, and that's what the number being reported. 4 times a year. So March, May, September, and December. So, again, it's only been right 3 times out of, let's see what we got, 5 years, 4 times, 20 times. So 20, only 3 and 20 have actually met expectations of what they thought was going to come out. So expect that to be a nice Aussie dollar mover and shaker. And then moving on over, checking out what do we got coming up later this week. Yeah, Wednesday, we're going to have the pound with the services PMI. I mean, there it is, PMI day after day after day. So we had the manufacturing PMI. And then we're going to have construction PMI on the pound. Then over at 4:30, we're going to have the services PMI. So all these huge PMI numbers coming out of Britain. And so just 4:30 trades over and over and over again on the pound dollar. And then the Spanish 10-year bond auction, which will be huge. That one is going to be coming out. They're going to be watching that like a hawk to see what those numbers come in at. And that will definitely affect the way you wake up on Wednesday morning. And but again, that's coming out. There's no exact time. It's just it comes out when it comes out. And if that number ticks back above 6%, then some alarm bells are going to start going off. And then we also have, we got employment stuff coming up this week, right? So that's our big numbers of the week that we need to be watching out for. We got the ADP non-farm employment change number coming out. Expectation 129,000. That number is coming out at 8:15. And if you don't recall, we talked about this last month. They actually updated how they do the number. They added more companies. They basically added 2 additional sectors. They added different sizes of companies, added a lot more people to it. And it made the number actually look better, basically just by doing that. So they're trying to get more and more accurate. They want to show like the final unemployment rate, the one that actually gets released later in the week. They want to be, they release it like 3 times, and they're trying to actually get the number for what happens 3 times later, basically 3 months later on the unemployment rate. And so they're trying to make it a more accurate indicator. Because they have more data than the government because they do payroll. I mean, that's pretty much it. And so anyways, 8:15 a.m. on Wednesday, Eastern time there. And then let's see here, the ISM non-manufacturing PMI here in the U.S. coming out 10 a.m. on Wednesday. That'll be a big market mover, so you can put that one on your calendars. And for any of you index traders out there, and of course that'll affect pretty much everything. And then New Zealand dollar, if you're a New Zealand dollar trader, then 3 o'clock on Wednesday, they're going to have their Fed funds rate come on out. They're going to have a press conference, rate statement, and cash rate. They do all 3 at the same time. And then we'll be rolling over the Aussie dollar. It's going to have their employment change and their unemployment rate again on 7:30. So, I mean, nighttime trade, day after day. All right, Aussie dollar. And Aussie dollar again, 7:30 on Thursday. They have their trade balance report coming out. And so that's the difference in, basically imported and exported goods. And obviously can impact, inflation and demand and everything else. So again, Aussie dollar trade, 7:30. Okay. Hopping on over Thursday, we got the CPI number coming out of Frank. That'll be a big Frank mover, and Frank has been having some weird issues going on, as we talked about earlier in the show, with how, some of them are even starting to charge negative interest for holding the Swissy there. And then we got the asset purchase facility coming out of Britain at 7 a.m. on Thursday. And at the same time, they're going to be releasing their official bank rate. And so basically their Fed funds rate for the pound is coming out, and it's expected to stay at 0.5. It's been there, forever. And let's see, I'm trying to figure out when it hasn't been there. I don't even know if my charts go back. Oh, they do. Wow, it was at 5.2. Let's see here. Oh, 1% February 2009. But since March of 2009, it's been at 0.5%. I doubt it's going to change. If it did, wow, that would be a massive uptick on the pound. But if they raised it. And then the Euro's minimum bid rate is going to come out at 0.75% is the expectation. It was 1% back in June. And so that number's going to come out at 7:45 on Thursday. And then Canada's going to have a building permits report come out. Expectation is 2.3%. That's 8:30. And the ECB press conference, basically based upon their bid rate, is going to come out at 8:30. So that's going to be a market mover right there. Be aware of that. And it's going to come out at the exact same time that the unemployment claims number comes out. And right now they're expecting the number to come in at 382,000. Last night they came in at 393,000. And so that would be a better number than the number last time, but that's the number expected. That's 8:30 a.m. on Thursday. And then you're going to have the Ivy PMI. So the Richard Ivy School of Business coming out. Again, you can always go to marketeconomics.com for all these PMI numbers, MERKIT. And but that'll come out from the Richard Ivy School of Business, and that'll be for the Canadian dollar. And you can hop on over there if you want to see the ivypmi.uwo.ca. ivypmi.uwo.ca, or just hop over to Market Economics. And you can check that one out. And let's see here. What else do we have? One other number. And so let's see. We got trade balance. Oh, we got natural gas storage, of course. And, crude oil storage on Wednesday, natural gas storage on Thursday, like every week. And then, like I said, trade balance, Aussie dollar on Thursday. And then hopping on over to Friday. A lot of good news. A lot of good timing events. Some market-moving events happening. So you can take advantage of them. And we got a little bit of volume back now. The holidays are over. I know they're over, a week ago. But still, a lot of people, trailing in, coming in late. So we got a little bit more volume coming in, which is good. Foreign currency reserves. So on the foreign currency reserves, checking that out. That's going to come out of the franc. So that's going to be huge, just with all the things happening with the Swissy right now. That'll come out at 3 a.m. on Friday. You got manufacturing production coming out of Britain, 4:30 a.m. And there's a lot of reports that come out. I'm just telling you the ones that should be market movers, okay? And they'll move even more if they don't fall in line with expectations. Then good old President Draghi from the EU is going to come out at 5 a.m. on Friday and try to get people happy again. And so we'll see how that one turns out. Canada will have its unemployment change and unemployment rate come out at 8:30 along at the same time that the United States has it. So 8:30 a.m. on Friday. Boom. I mean, it's expect a bomb to go off. We're going to see what's going to happen. But I mean that in a positive thing. I mean, the market's going to move a lot. And we'll have non-farm employment change, unemployment rate, average hourly earnings, labor productivity in Canada. We're going to have employment change in Canada. We're going to have unemployment rate in Canada. All that happening at 8:30 a.m. on Friday. Definitely want to be straddling with defined risk when that thing comes out. And then preliminary University of Michigan Consumer Sentiment Report, 9:55 a.m. on Friday. And that'll basically be your last big report for the week. So, definitely check out the archive after the show. You can go back and you can, watch that each day. And on Mondays, I'm trying to make sure I do go through the week. And so you just have a little bit of a trading plan. And you want to have four things when you're trading. You want to have your technicals. Well, traders love technicals. We're all over that. And then you want to have your seasonals. So this is traditionally, which is sort of interesting, this is traditionally a bullish day. And a bullish week in the market, the first week of November. But with the fiscal cliff hanging over, it's sort of hard to tell what's going to happen. And so seasonal cycles give you a heads up, but they don't necessarily, you want to be aware of them. You don't necessarily always want to trade purely based on them. You got to look at the charts. They're going down, don't buy. I don't care if the seasonality's up. And so I shorted on Friday, but I got out of my trade because the market started moving back up. Because historically, the market's been down 70% of the time on the last trading day of November. At the same time, I do got to get out of the trade if the market starts going against me, right? And so you want that seasonality, and then you want to have fundamentals. So, fundamentals is not so much like you trying to guess what the market's going to do when it happens. It's more about being aware that a bus is going across the street and you don't want to walk in front of it. And so you want to make that part of your trading plan. And, either you tighten your stops, you turn off your trades, you use defined risk trading, you straddle the news. But you need to be aware of, the vehicles crossing the street. Okay? And otherwise, you can put your money out there and it's going to get ran over. So you want to be aware of those fundamental reports and know, what's causing the market to move. A lot of times it's going to be that PMI. Bam, nailed it. It fell this morning. And then you would also want to have your statistics. That's your deviation levels. And the deviation levels are very, very helpful for helping you really narrow it down and focus on, exact price levels that are sort of in your face. And they basically point out, hey, this is what you need to be paying attention to. There's no denying it. Here it is. And just make sure that you are looking at the right thing at the right time. And because if you go in there and you have improper expectations, and I guess that's probably more than anything what the deviation levels are about. They're about managing proper expectations. And most people, they don't have proper expectations in their trading, and they go in and they think the market's just going to go to the moon. And, so they're, especially if they're doing like binaries or something like that, or they hold on to their profits too long and they wonder why, well, it went here, it was just flying, and then it just fell. And they feel like that was just by randomness. It's like, no, the market priced in how far the market was going to move. The market moved there, the market fell. And that's just how it works. And so that's why I, personally, I love to monitor the deviation levels on a daily basis. And so we go in and check that out. And then let's see, what else do we have here? Like this morning. Okay, oil moved up to $90.33. Well, if you were long, you would have been tightening your stop at 80.70, 90.01. You wouldn't have been on top of 90.49 because it didn't get that high. But you definitely would have had your stops tightened over here. It started falling back below 90. Then, okay, well, now where do I expect it to go to? Well, maybe down to 89.70 or 88.91. And right now the market's sitting at yesterday or Friday's settlement. It's sitting at 88.91, give or take a tick. And so will it move back up from there? I don't know. If it moves down, where will it move down to next? Well, 88.12 would be the next down move that we'd expect if oil is going to move down further for the day. Right now, all is quiet with oil. So, but it did have a nice, good up move. And when it did fall off that deviation level, that trade reversal, then, you had an expectation of what you should do. And if you're going to go and you're going to reverse off of it, let's say you thought, hey, okay, well, this is breaking down. I'm going to sell now. Where's my profit target? Well, your first profit target, you go the opposite direction. It's going to be 89.70. Once it breaks that, you're going to tighten your stop, and then you're going to tighten it down at 88.91. So right now, you just would have, like 89.70 right here, you would have tightened your stop on the way back down. And then 88.71. So when it came down here and it hit that, you'd be looking to tighten your stop again. So just, I want to make sure that as a trader, you're really understanding the absolute need that you have to tighten multiple aspects in trading. If you want to be one step ahead of the markets. So the maximize leverage, minimize risk, that's trading Nadex. But the, being one step ahead of the markets, that's taking into account statistics, fundamentals, seasonals, and technicals. And I know it can feel a bit overwhelming. And that's one of the reasons why I do the deviation levels, to make it very easy. You don't have to do the hard math. But you need to know how far do I expect the market to move. And not how far do I expect the market to move. But really, how far do I expect the market to move based on how far does the market expect the market to move. And that's why, I love these numbers. They help give me a good roadmap, you can say, to the market each and every day. So let's go ahead and take a quick look at these real quick. We'll look at sort of where the markets have went. We got the S&P. It went up to 1422.75. We thought it'd get up to 1421.6. It did, and then it turned around and fell on back down. Looking over at NASDAQ, we thought it'd get up to 26.89, then hit 26.95, and then it did it. Turned around and went back down. So, using these levels is going to help you manage your profit and also, help you manage your risk. So stay right there. We'll be right back with the Diagnostic Trading Hour.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. And we got some great shows here for today, so definitely stay tuned for each one of them. And what I'm doing right now is just sort of going through and checking out a few of the deviation levels. And if you haven't already, definitely check out the Diagnostic Box Spread Scanner. Very helpful. You can go in there and say, you know what, I don't want to risk more than $100. I want to have the potential to make at least $2 for every $1 at risk, and I want to buy or I want to sell on the market. And it'll actually show you all the spreads that exist for whichever market it is that you want to trade. And makes it just very, very helpful for trading. And so we can go over there, we can check that out, and let me see what we got right here. Pull it on up. So now what we're doing is we're looking at the deviation levels and just sort of showing you how that helps you, and we're looking at the indexes. We can also go in, we can look at other markets like, say, natural gas. And so we pull that one up for you. So on natural gas, we got the market moved up to a high of 3.631 and almost to 3.649. And one of the things that's also good to do when you're looking at all of the deviation levels is to turn on the overnight, just to make sure that if it did move before that, you're aware of it. But let's see, it did move a little bit higher. It looks like we got a high right here of 3.643. We thought I'd get up to 3.649 before it had a potential of turning around. It definitely did turn around and gave it all back up. And pretty big gap there, even on the open on natural gas. Over on oil, oil moved up to a high of 90.33. We thought I'd get up to 89.70, then on up to 90.01, and then possibly to 90.49. It didn't quite get that high, but it did hit 90.33, so it worked out pretty well for you. And then looking over at gold. On gold, we had a move that went up, so we had a little spike right there on the hit a high of 1724.9. And on gold, we expected to move from 1719.4, then up to 1722.1, and then on up possibly to 1726.2. Didn't quite hit that, but definitely did hit that 722.1 several times. I mean, you want to talk, this is one of the deviation levels right here. Talk about a resistance level, just boom, 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 over and over again. And and then on silver, let's see here, we had a move on up to a high on that spike, same time that gold happened there on the news report. It happened at 33.93. We expected it would get up to 33.79 for a full deviation. So it actually broke through a full deviation before giving it all back, basically respecting that deviation level last night. Again, a little bit later in the afternoon, or late morning there, before it moved on back down. And then we scroll on around, we check out some copper. So copper, definitely when you get the home sales reports coming out, that's when you want to be watching the copper markets. 3.6675, and we expected to move on copper to go to around 3.669, and then to 3.678. So didn't quite hit the 669, but we're talking a few ticks off, and I do give, obviously a few ticks of leeway. You don't make everything down to the, exact tick, but it is amazing how a lot of times it will actually hit the exact tick. And then on corn, we had to move up and then to move on back down. On the move up, we went on up to a high of 762.25, and we were expecting corn to move up to 761.9 for full deviation. It hit that full deviation and then turned around and fell on down for the rest of the morning. And we should expect that usually to happen on a full deviation. It should not keep going. I mean, we're going to use extreme caution, but not a big surprise that it gave it on back up right after that. And then looking on over at soybeans, soybeans also had just a massive move on up last night. Moved and then basically peaked out right on the market open here at 1462.75. And that would have been just above a one deviation. So almost to a 1.5, but basically above a one deviation up to 1462.75. 1455.6 actually was the one deviation move, and it just spiked up there before giving a good chunk of that back. And we scroll on down. We look at just a few of our currency pairs before we wrap on up for the day. We had the Aussie dollar off the negative news that came out go down to 1.0392. And we had an expectation down to 1.0398. Last pair of the day, we'll check out our euro dollar at 1.3074 with an expectation of a one deviation of 1.3065. So its move should be done for at least today. Stay tuned. We have a great show coming up for you, and I will see you tomorrow. Same time, same channel, right here on TFNN.com.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.